And he actually is in charge of probably one of the largest institutions trying to build this ecosystem, trying to support countries in building legislation, framework, data, and also bring money to this country. So thank you very much, Simon, and I give you the floor. Thank you.
Thank you, Luca. It's a pleasure to be here, and it's nice to follow on from Sita. We sat together 20 years ago on Maya's course. I think once you sit on that course, you've got the bug, you've got the enthusiasm for housing, and I think we've all had look into what our input can be in changing systems. So I'm kind of going to share some thoughts, put it that way. I've got 15 minutes, I've got about 7 slides, talk about sustainable finance, an ecosystem approach for housing. I'm having the same trouble with moving. Oh, there we go. And so I put in the title of the presentation into ChatGPT and said, I need a title slide, and that's what it came up with, which I think is pretty cool, actually. I like that. I should emphasize that these are my own personal views. I'm not speaking on behalf of the World Bank as such. So, yeah. So, before I go in, I've got my first slide, and I think it mirrors a bit one of the slides that Maya has, is why we need sustainability. And there's just a very, very striking slide. I presented it at ISMMA yesterday. And I think it tells the whole story of why sustainability is so important and needed in the African context. Can you move forward the slide? There we go. So it's a similar one to Maya's. They've just updated the UN population's prospect to 2024, so it now goes out to the end of the century. And it's really kind of astounding, the difference on the African continent relative to the rest of the world. I was working in China during much of April this year, where the population has actually started falling in China. And they're dealing with all sorts of problems, like how to house their elderly. How's everything going to be paid for with the workforce falling? Africa's got the opposite problem, as you can see. Really a booming population, the only continent doing so. And not only that, it's also urbanizing. So you have almost a double whammy of the population growing, but also the population moving to cities. All of that translates into a humongous housing need over the next few decades. And there are so many killer facts that you can derive from these numbers. So by 2050, 7 of the world's 20 most populous countries will be in Africa. So you'll have Nigeria as the 3rd most populous country in the world. You'll have Ethiopia, Kenya, Tanzania, DRC, and Egypt, all in the world's top 20 most populous countries. Globally, 1 in 4 people will be African by 2050. 1 in every 3 young people, so those aged under 24, will be African. Africa will really be, as Maya's slide showed, it will be the workforce of the world at that point. This workforce needs to be housed. There we go. So, again, I'm setting some context for the panels that are going to follow. And I think defining sustainability is kind of a useful step to take. It's often used as a sort of catch-all term, and it can be vague sometimes. So the way I see it, sustainability, there's kind of almost 4 dimensions to it. You have the most obvious one, which is the green aspect, the environmental, the climate, about energy efficiency, use of water, adaptation needs with climate risk. And we've seen that most recently with the hurricanes in the US. I was in Nigeria 4 weeks ago, and they had the most humongous, never before seen flooding in the Maiduguri region up in the northwest. And these events are going to become much more common. So building houses, communities, settlements that are resilient to that, it becomes critical. The economic and financial sustainability, having affordability in there, Housing is a long-term investment. You need long-term sources of finance. You need a whole financial ecosystem that works with investors, with pension funds, with insurance companies, investment funds, that can provide this long-term finance, but also earn a return on it. You want private sector participation. This implies it's got to be profitable. You need the right enabling environment for companies to invest. You create jobs. And then actually maybe one of the most important points in this whole presentation is about managing risk. And this is the critical role that the financial system can play in terms of how it allocates capital, how you measure the risk. The carbon credits is an opportunity to really bring in the cost of the environmental change into the economics of housing, and how that money is then allocated based on those risks. The third dimension is social side, so having inclusive housing finance. And I say housing finance, not just mortgages. It can be rental, it can be rent to own. It can be any form of housing and the financing behind it. In Africa in particular, mortgages at the moment will really only serve the top 5, 10, at best 15% in some countries. So other solutions are also needed. Social also means gender equality. So looking at solutions that are inclusive for women also. And then the last dimension is the institutional and policy aspects. So governments having oversight, the right governance structures in place, and public-private cooperation. I'm not using the word partnership. I want it to be broader than that. It doesn't have to be a formal PPP, but there has to be a partnership between the private sector and government. And then, of course, data collection, which again, I think is essential, particularly in Africa. It's very difficult to make policy, to set targets, to calibrate projects without a good source of data, which is often lacking. So how do you look at sustainability? So at the very top level, I guess the obvious one is looking at the Sustainability Development Goals. And I was really excited when these came in. I think we'd been working previously with the Millennium Development Goals that really had nothing on housing. So SDG 11 had the goal of safe, adequate, affordable housing for all, which was great, very excited. I think Anna Claudia from UN Habitat spoke yesterday that one of the downsides of it has been that the goal was set, but then it wasn't really tracked and measured. And it's almost a missed opportunity, because you don't have accountability then. You set a goal, but if you don't measure how well you're progressing towards it, you can't change course, and that course change your policies. It's kind of just there, and we're kind of slowly ambling to 2030, and it's clearly not going to be met, but there's no urgency to try and do something because we don't have the data to see how close we are to it. The other point about housing is that there's at least 7 of the other SDGs are relevant to housing. If you have good housing conditions, it improves health, there's achievements in terms of education, it creates jobs, it creates economic stimulus, it can play a role in gender equality, and clearly the built environment is a big contributor to CO2 emissions. So having a systemic approach on how you look at sustainability, and so this is kind of the sort of framework we look at from the World Bank. And I may be slightly conflating housing value chain and ecosystem, but we split it up. And at the top, you'll see adequate income. We're almost taking that as an exogenous factor. You take the income. If it's low, then you have policies to deal with it. But in terms of framing the housing challenges, that's an input into the model. You then split it into the demand side, supply side, and then you have cross-cutting issues. And it's interesting, this slide is a few years old. We did some work, and actually the cross-cutting issues probably need to be updated. Every World Bank project now has to have green credentials, have to have gender equality credentials, and it has to have capital mobilization credentials. So every project that we do now has that cross-cutting aspect. And it's interesting, I think there's a lot of consulting firms in the room, and we read a lot of reports. Every firm has its own version of this, whether it's a value chain with all the links in it, this sort of approach. But it's essential to see housing as that ecosystem, and you're only really ever as strong as the weakest link in that chain. So again, coming from Nigeria a few weeks ago, there's a lot being done. You've got TMRC, which is a great institution, but they're handicapped by the fact that there's no pipeline because they have such issues with land titling. So again, and without taking that whole ecosystem value chain approach, you can do all you want at one end of the chain, but it won't go anywhere if you're not fixing problems upstream. And so another way of looking at it, and again, this is one of the outputs from our trip to Nigeria 3 or 4 weeks ago, which again is a different representation of essentially the same thing. And we did a series of workshops. I think we had 7 workshops kind of categorized with, I think, developers, financial institutions. We tried meeting all 36 states, so we had the housing commissioners for all of them. We had different parts of the federal government. And then we categorized all the challenges we see. I'm not going to go through all this, it's just to kind of illustrate a bit our approach. Looking at the challenges at each element of the chain. We then built on that with what can we do, what was the plan, what are the priorities for each element of the chain. And then you kind of look, well, how are we going to measure that for each of, you set the priorities, how can you set goals, and then measure those goals also. And so this brings me to the measuring sustainability. And again, Casey, you know, I'm a huge data geek, and it's a topic that we have every year at the AUHF in particular, and there's always more we can do. So this HOFINet initiative is great, I think. And I think I love the yearbook. It's one of my favorite publications. I use it almost daily in my work, and we need more of these sorts of things. And so the challenge is really what metrics to use, what KPIs, what indicators. You need KPIs or indicators that can help with the policy aspect. You need transparency for investors. If you're issuing green bonds, the investors need to have confidence that they're investing in something that is genuinely green and you can see through to the underlying assets. You need to have it organized, so you need a green taxonomy. So the government is clear on how all the green financing is structured. You need the certification approaches that are credible. I mentioned EDGE here from our colleagues at IFC, or the LEED standard is one approach. There are others also. There's also challenges, particularly if you're working on a value chain, of how do you certify green materials? Often there are no standards. And those green materials, it also depends how they're used a bit. And it poses a challenge. If you're an SME building materials for green, how can you get the cheap financing potentially associated with green if there are no certification standards for the particular product that you're producing? In terms of measurement, one of the obvious approaches, which I still think will happen at some point, are carbon credits, which is almost a leveling way to understand the impact of CO2 emissions. It's still a mess at the moment, with multiple exchanges, a lack of certainty. I think we'll talk more about it. I don't know if you're agreeing or disagreeing with me, but from the way I see it, there's still multiple standards, multiple exchanges, there's voluntary schemes, mandatory schemes, and we need to sort this out quickly, I think, because it's definitely the way forward, but it needs to converge towards a clear global solution. Yeah, and then I talked about the SDGs and the need to measure them, and then expand data collection. And so I think this is my last slide. I wanted just a kind of worked practical example of what we're doing in Rwanda at the moment, where we're working with the Development Bank of Rwanda and the Rwandan government. The BRD just issued last year a 7-year SLB, sustainability-linked bond for $30 million. They've issued a second tranche. I think it may have just closed. They opened it a couple of weeks ago. And the really exciting thing is that the SLB has a KPI linked to housing. So BRD's committed to refinancing 13,000 affordable housing units by 2028. If it achieves that, and it's a 7-year bond, so the last 18 months of the bond, the coupon is stepped down, so it has a 40 basis point reduction. And this is kind of the incentive for BRD to do this, or the reward for having achieved this. And the World Bank, we supported this with a credit enhancement. So we have another project generating cash flows. We ring-fence $10 million of those cash flows, put them in an escrow as collateral, basically, for this bond, making it much stronger, more secure, and attractive to investors. And the idea is that the first one was a huge success, oversubscribed, and that they're going to do multiple issuances every year or even more regularly. And again, talk about the value chain approach. That links into an ongoing project that's been running for the last 5 years, $150 million investment, supporting the Gira Iwawe program, which means Take Your House program, where we provide essentially, the main part of it is providing liquidity to banks. So it's through the BRD, it's a simple form of an MRC, but really focused on affordable housing and defining affordable housing in a very clear way, also having conditions on the use of local materials, energy efficiency, and so on. I think the other part of the project, we have 20 million as part of that project also allocated to cover last mile infrastructure on projects. But it's done as a reimbursement. So once the developers built the houses, they are then able to present the bill. As long as all the housing meets certain conditions, that gets reimbursed to them. And it's worked very well as a way of really genuinely creating affordable housing, using local materials, and done in a truly kind of sustainable way. And then alongside that, we support a lot of work on data collection. I think we've done studies on the Sectional Title Act, for instance, of how we can build more multi-story apartments, for instance, and innovation in building materials, what local materials can be used. And so really, I think every aspect of that value chain at the bottom there is ticked under this project. So really a sustainable approach. So in conclusion, I've just got 4 quick points, kind of reiterating some. I think certainly from the World Bank, it's now a standard. I can't initiate a project unless I've got a clear green credentials to it. It has to have gender credentials. It has to have what we call PCM, private capital mobilization. You need to show that we're using other instruments, where it's guarantees, blended finance, to leverage funds from the private sector. Data measurement is key. It's impossible to say you're resilient, that you're sustainable, if you can't measure it in some ways and show the results of the work you're doing. Again, the whole finance ecosystem needs to play a part, regulators, investors, lenders, and it's creating that virtuous circle of getting your pension funds to earn a return above just the regular treasury bills, but doing so, again, in a sustainable way. And a way, I mean, again, coming back to that first slide, the scale is immense, and it has to, the private financial system has got a big role to play in this, but it needs to be sustainable within that financial ecosystem to work. And then lastly, the value chain approach. And certainly from the World Bank, one of the lessons we've learned on that is just the difficulty in communication. We work in so many countries where there's just no dialogue between the Ministry of Finance and Ministry of Housing, or government and private sector. If you're going to truly have a value chain approach that works, it needs to be coordinated with dialogue. It's one of the nice things working in Kenya, where I think that dialogue really is there. There's fora that allows you to discuss that. It's not the case everywhere. So I'll leave you with another ChatGPT. Thank you. And you'll notice all the spelling mistakes, so I think our jobs are still safe for now anyway. Thank you.
Thank you.